Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, live streaming from Discord. Let's move right into the gold market that seems to be experiencing a fast market conditions here. We have been all over the place here since last night, coming down to 1892 and reverting from there back up to making almost the 1909 target of the one level, of this sell one level, and we've activated a reversion from there back down now to where we are activating a harmonic buy trigger. This is a very strong signal here. This first bar tested this level here, and if we take a look at the level here, guys, 1890 daily and weekly are matching. This is a perfect harmonic relationship, so expect reversions to unfold from here. Expect buyers to come into this level here. Let's watch the market here a little bit on the gold. The silver is bear with me here, I'm having a little bit of issue with the internet this morning. We can see on silver here pretty much the same move taking place as we are in a fast market condition here. Even for TradeStation, we seem to be running a little bit of delay here this morning, but we have fast market conditions. We're getting a reversion in silver from that 27.74 average. We're getting a buy trigger. If we run up to 27.91 and close above it, we're going to be looking at a pretty much rejection of this bearishness here and activate a bullish price momentum with the targets of 28.16 to 28.41. We're looking at a major reversion here after the completion of this pattern, this bearish pattern that found buyers at higher levels. So we're going to go with the market here. We've covered our short positions that we recommended to take overnight, and we pretty much are net long. If you guys have followed the signals early this morning, then we should be net long after you covered those positions. I apologize for the delayed on this internet here. We seem to be entering fast market conditions. Let's continue to just watch the market here for a little bit. We seem to be in really fast market conditions here. And 1896 above for the gold market is going to bring in, or is going to change the uptrend, the bearishness again to an uptrend. So look at this green bar. This is what I mean by a rejection of this price and harmonically aligning itself into identifying buyers aggressively here, taking the supply that was offered in just the last few sessions. So this is a very good signal here, guys. Maintain your net long position now. We've covered our short position all the way down into this red bar. So you should be net long. Let's watch the market here, because I think we're going to be entering fast market conditions. Prepare for fast market conditions. There has been a great deal of talk about coin or virtual currencies, and the market has entered into a very volatile period, reacting to some of these comments by Elon Musk and some of these gurus now in virtual currencies, virtual assets that are manipulating the market to their benefit, I believe. In the meantime, you have a lot of people that shouldn't be trading these markets losing their fortunes, losing their savings in this market. So be careful. It is a treacherous, volatile, very, very volatile market. And only if you're willing to handle the volatility, you should not be involved in these markets. But they are very exciting trading markets, and that's one of the reasons why I keep a watch, and I am trading these markets. But for most people, they're extremely, extremely volatile. You want to pay attention to Bitcoin, which is entering into the buy 2 level, which is extremely oversold. And the 2737 is the buy 2 weekly level. That is right now a 95% probability that if we get the market above 2737 and close above there, then we're going to be activating a bullish weekly signal, which is pretty strong. So let's let the market do whatever it needs to do to pretty much clean itself from a lot of these weak buyers. Major volatility back in the middle, guys. So you want to just measure and be careful about over leveraging yourself or over trading in these markets. I think the volatility is going to increase even more. Again, I think Bitcoin or the virtual assets established a new benchmark for volatility. Stay long. We're getting buyers coming in here. This is what we expect. This is what the AI of the variable changing price momentum indicator prospectively told us, that if we come down into this level harmonically, particularly harmonically aligned in the 1890, this is what we can expect. So it's a prospective algorithm that allows you to drive in this market intelligently, mathematically, without emotion. regardless of what was the reason for the market coming down into these levels. If we can, and I'll tell you this is an incredibly strong move that we have right now. And it seems that the correction, this counter swing correction, was completed by the market coming down to a low of 1885.70 after a high was made last week of 1912. So the corrections, as you can see, they don't last too long, which is really a very bullish sign. And this is the daily chart, and I know these lines can be very confusing for most people and may look like a crazy chart, but this is music to my ears because this is a combination of everything that I use for myself. And what we have here is, this is a flag resistance of this line here that I'm highlighting. The market is just about to break this, and if we break through this here, we're looking at the area of distribution of supply that is all the way up to the 1953 level, which is the weekly target that is now being activated by the market trading above 1890 under weekly signal. The daily signal is all the way up to 1915, 1909, 1915. 1924 is the first target of the weekly. And that's the first target that is being activated right now under weekly. The daily is activating targets of 1909 to 1915. So these are the numbers that are produced by the VCPMI. I want to point out to you that market, let me take a look just to see where we are on the monthly basis, and you can see 1864.65 is the monthly average, and we are trading right at a 50% Fibonacci retracement from the recent high that we saw to the 1675 or the 61.8% Fibonacci retracement that we saw, and as the bottom of the range for this measurement. And the 61.8% retracement from this correction is 1950-90, 1953, and right above it, you're looking at 1961, which is the monthly target. So I think it's fair to say that what the AI is pointing out to us here is that potentially 1960, 50, 60 is going to be tested harmonically. And this would be the monthly target. And this is where I would, if completed, lock in some serious profits for you guys. So let's pay attention to the market. Let's take the path of least resistance and follow the VCPMI. Let's just watch the market here for a little bit. one of the things I want to point out to you guys that regardless of this inflationary uh, psychology that we seem to be entering into, the 10-year yield is coming down. It's at 152 right now. So I don't see any danger right now in interest rates going up. Although now, what you'll find out there are pundits, are experts. They're all dictating, pontificating about inflation, about interest rates, and where we're going to go with them. But in taking a look at the market, in taking a look at the 10-year note, as you can see here, we're at 153. We're down 4 ticks, down to 2.57%. So interest rates are not going up on the short end of the market, which is very bullish for the metal, which is very bullish for gold. And that's what the market, I believe, is beginning to react to here in gold, that interest rates look like they're not, at least for the time being, any pressure or any problem in terms of rising interest rates. But the residual effect, so to speak, I'm sure you're going to hear the rhetoric out there again of market raising interest rates and inflation, is getting out of control. I think what we're looking at simply is and I believe that it's a short-term aberration. The question is, how long is it going to last? Before things do kind of settle down and before the supply chain is pretty much replenished again and is able to meet this demand, that has been created because we're moving back into the economy, and we're finding problems in the supply chain, problems in importing goods, the rates of the shipping rates have gone up 400% or 500%, I believe, from $2,000 to rent one of those big cargoes ships to about $8,000 per container, which is unbelievable. So this is why we are beginning to see the price beginning to be translated or transported, so to speak, into the retail end of it. We're finding a lot of shortage of goods in just about every sector in the economy. From labor shortage to computer chip shortage to food shortages, and if we get on top of this supply chain disruption that we have, weather problems developing, boy, I tell you, I think the commodity markets are going to be extremely, extremely active if that's the case. Because then we are exasperating the problem after a problem after a problem. And there's only so much that the market, I believe, can balance, you might say, before the power of the demand or supply is affected, or becomes, you might say, reflected in the prices, in retail prices. We are beginning to see tremendous increases in prices, food prices. I mean, prices just across the board. And this is not just in the US. We're looking at a global situation unfolding. And once again, one of the things that really puzzles me here, and I'm watching it very cautiously, patiently, because the gold and silver markets are completely below its mean, which means that basically value, the price discovery has been suppressed. Take a look at everything else across the board, and the only thing that is not going up is gold and silver. And you know, this anomaly is not going to last. This is not going to last. The markets will adjust, and it's still time. The issue is that they don't go when you want them to go. You know, and but I got to tell you that you want to take advantage of the fact that we haven't yet gone as I believe we should go. In the meantime, it's providing you the opportunity to build and add to your position, which is what we are suggesting our traders in our live trading room to do. Stay long on the basis of the long term and use this short term volatility to trade the market, and reinvest any profits that you may make trading short term into a long term strategy, because I think we are very, very close when we're going to wake up one day and these prices are going to be long gone. Long gone. There is a liquidation mode going on virtual currencies, and I would just be patient until we wash out, so to speak, all the weak buying or speculation that's in the market. We are in a buy area, so we are recommending to watch the market carefully because it may be producing some buy triggers. It appears that on the daily, we're looking at the market activating a buy trigger on coin. Let me bring it a little closer here. From the 222.70 level daily. So hold on to your coin, hold on to your virtual assets. If you short some of these derivatives, again, we recommended to take some profits. The levels that we were looking for were completed. So I think it's a question of being patient. Because I do think that we're going to be moving into some very, very exciting markets here. This correction in gold and silver I believe is a counter swing that is giving us an opportunity to potentially buy at this lower prices here, expecting a reversion to test the upper end of the weekly in that 1924 to 1953 levels. So stay long, and as you can see here, add into the corrections into the blue levels. I'll be honest with you, I'm not so sure if we're going to come down any more than today. We've had two previous tests of this low to hold and identify the accumulation area that the VCPMI tells us. We came into this week buying at 1860 on the 4th. The 7th went through that weekly average, and today we're trading around it. And so I think again, and it's out of this bit of a bearish flag formation, breaking out of this resistance here. It's going to accelerate us in potentially the area of distribution of supply at this higher levels here, 1909, 1915, and 1924. Continue again to be patient around the average here. There's no day trades around the average. The trade came in here when the market came down to 1890. It completed the target of 1896 on that trade, and it's back to neutral. Trading above 1896 would reactivate the uptrend. The price momentum uptrend with a target of 1909 daily. Okay, I'm going to continue to update you guys throughout the day. I appreciate the opportunity to share this with you guys in YouTube that are serious traders. Please subscribe to my channel here so we can continue to provide you with the most incredible market intelligence available. We'll talk to you soon. Have a great trading day. Talk to you soon.